Hello and welcome. Today's webinar is Platinum Open House, led by Wayne Thorp. My name is Pete Wynn, and I am your host for today. I want to remind all of our webinar viewers that AAII is a nonprofit educational group and is not a financial advisor, and thus is not able to give personal advice. Every investor is different. That's why our goal with each broadcast and article is to educate you on how to make better financial decisions. A handout of the presentation will be made available under the handout section of the GoToWebinar control panel, located on the right-hand side of the screen. We'll make it available at the end of the webinar. If you have questions, submitted and read them aloud for the benefit of all watching the broadcast. Questions that are not selected for the broadcast will be reviewed and addressed afterwards. If you experience any issues with the audio or video of the webinar, please consult instructions on how to change your device's settings or consult the GoToWebinar website for support at www.gotowebinar.com. A friendly reminder that this presentation is recorded and a replay of this webinar will be available tomorrow on AAII's YouTube channel, along with links to the evening's handouts and to some of the resources discussed. The American Association of Individual Investors is an independent nonprofit corporation formed in 1978 for the purpose of assisting individuals in becoming effective managers of their own assets through programs of education, information, and research. Now sit back, relax, and enjoy this live presentation. Take it away, Wayne.
Thank you, Pete, and thank you for moderating this afternoon. Hello, everyone, and welcome to this afternoon's AAII Platinum webinar. My name is Wayne Thorp, Head of Research and Analysis Products and AAII Senior Financial Analyst. Also, in my free time, I'm the Program Manager of A+ Investor and the Lead Analyst and Editor of the Stock Superstars Report. Over the next hour, I'm going to offer an overview of the elements of AAII's Platinum service and how you can use them to become better managers of your own portfolios to achieve your financial goals. Now, regularly, each component of Platinum could easily be its own hour-long session. And in the hour I have today, actually less, I will only be able to highlight the key elements of each of the elements of Platinum to allow me to have time to answer your questions. Luckily, we've spent a considerable amount of time and effort getting started in onboarding materials to help you learn how to use these tools and portfolios to achieve your financial goals. Also, there's weekly commentary and content offered from each of these services that provides continuing education on investing in the tools and services themselves. Now, before I begin, I want to remind you to submit your questions via the GoToWebinar dashboard, and Pete will be monitoring them, and we'll have plenty of time at the end to take your questions. Now, if I don't answer your question, or if you have a question afterwards that you'd like to send me directly, please feel free to contact me at Wayne, W-A-Y-N-E, at AAII.com. So let's get started. Since its inception in 1978, AAII's core mission has been to offer unbiased, straightforward, and actionable investor education to individual investors. Over time, though, we've broadened our offerings to satisfy the evolving needs of do-it-yourself investors. To that end, we now offer data products such as AAII Stock Investor Pro Fundamental Stock Screening and Research Database Program, as well as our A+ Investor Service, which we launched in 2019. In addition, to help investors who are looking for curated stock ideas, we've launched a number of model portfolios, including the Model Shadow Stock Portfolio, Dividend Investing, Stock Superstars Report, and VMQ stocks. But to provide a complete wealth system for individual investors at a significant cost savings compared to subscribing to these products individually, we launched AAII Platinum last year. With Platinum, you get access to A+ Investor online data suite and our premium portfolio products, SSR, DI, and VMQ. So now I'm going to hold my breath and switch to my web browser for a live run-through of AAII's Platinum service. And Pete, just to verify, can you see my web browser?
Yep, I can see it, Wayne.
Excellent, thank you very much. So as an AAII Platinum subscriber, you have access to the AAII Platinum dashboard, which you can see here on my web browser. Here, you have direct access to all of the subscriptions that encompass Platinum. A Plus Investor, the Shadow Stock Portfolio, Dividend Investing, Stock Superstars Report, and VMQ stocks. Now on this page, you can also see daily movers, so stocks that are being held in the various portfolios that are having a good day. And being a little selfish, I'm very glad to see that Triton International and InMode that are held in the SSR portfolios are having a good day, as well as the A Plus Investor stock grades for each of these. And if you're not familiar with our stock grades, I'll be touching on those in a little bit, as well as a complete comprehensive listing of all of the latest portfolio additions, as well as deletions that we've made for our premium portfolio products. But now I'm going to go individually through the different components of Platinum, starting with A Plus Investor. So A Plus Investor is AAII's online investment discovery, analysis, and tracking tool. And with that, you have a number of different tools and resources at your disposal. When you come to AAI.com's website and go to the A Plus Investor section, you also have an A Plus Investor Toolkit, which gives you links to many of the key features that encompass A Plus Investor, including the My Portfolio, a number of resources for stocks, or if you're a mutual fund or ETF investor, we have a number of resources and analysis tools for fund investors as well. Now, sort of the cornerstone of A Plus Investor, but really for AI membership in general, because this is also a tool that is available to A Plus and to AI members, is our My Portfolio tool. And the My Portfolio tool at its heart is a portfolio tracking tool. So, these are available at many different websites. But what we wanted to do is we wanted to create a system that in one place, so people could come to AAI.com for their investor education, but also that they could be tracking their different portfolio holdings, either those that they own, or if you want to track a watch list of investments as well. So this is the tool that these are the tools that you get with My Portfolio. And so you can see here, it's very typical of a portfolio tracker. Gives you current prices, daily price change. You can enter in the number of shares that you hold, and then give you the market value and the daily change. And actually, let me change this. So this is a portfolio where I've actually entered in the shares that I own. So you can then see the market value, the portfolio weightings of your portfolio. Now, beyond just being a sort of dyed-in-the-wool portfolio tracker, as an A Plus Investor subscriber, which you have access to through AAII Platinum, you have two additional resources that are available to you that you don't get with basic AI membership. Those being the A Plus grades, and these are grades for stocks, ETFs, and mutual funds. So for example, the A Plus stock grades are factor grades. Academic research has shown that there are a number of investment characteristics that have become known as factors that have been shown to generate market-beating performance over time. And what we've done is we've created these A Plus stock grades that track five well-known investment factors: value, growth, momentum, EPS revisions and surprises, as well as quality. So for whatever portfolio you might be looking at, assuming that it owns stocks with My Portfolio, you can see the stock grades of the different stocks that you hold. So you have a value grade, so that shows you the attractiveness of a stock based on a composite of investment valuations, PE, price to book, price to sales, price to free cash flow, enterprise value to EBITDA, growth, price momentum, estimate revisions, and quality. We also provide ETF grades for ETFs and mutual funds. Now, these are primarily based on performance, but we also have grades based on a fund's expense ratio, as well as the risk of the category in which it lives. So all of these grades offer sort of an objective way to which to evaluate either stocks, mutual funds, or ETFs that you either own or are considering owning. And so, having an objective system, you're able to do an apples to apples comparison of these different stocks, mutual funds, and ETFs to get a better idea of the overall quality, quote unquote, of these different investments. But really, one thing that I think gets overlooked a lot of times, and an element that we've been continuing to build on, and actually will probably be making some additional improvements on over the next quarter, is the diversification analyzer. Now, when you build a portfolio, I've met many investors over my almost 25 years at AII, and there are a lot of people out there that are sort of investment collectors. They will just they'll buy a stock, several stocks. They'll buy mutual funds, they'll buy ETFs, and they accumulate them. And all of a sudden, they have a portfolio with literally dozens and dozens of either individual stocks or mutual funds. And they think just by the sheer volume of tickers that they own that they're well diversified. Well, depending on the stocks, or especially the mutual funds or ETFs that you owned, this may not be the case. And with a diversification analyzer that's available with A+ and Platinum, you're able to get a better idea of the breakdown of your portfolio. So in this case, you can look at the overall asset allocation based on domestic stocks, foreign stocks, bonds, and cash. So this gives you an idea of how you're allocated across different asset types. But you're also able to see what your diversification is at a sector level, as well as a size level. Now, the sector diversification looks at individual stock holdings, as well as the ETFs and open-ended funds that are in your portfolio. So you can see exactly what your sector diversification is. Now, this is really important because if you could own several mutual funds, but depending on the style of a particular fund, you may not know that you're actually overweighted in either individual sectors or industries, or even individual stocks. So here, looking at my retirement portfolio, I can see what my sector diversification is based on the stocks, funds, and ETFs that I own. So, I purposefully have made this quote unquote sector bet, but if you think you're well diversified, you might be surprised to know that you're 39.5% invested in consumer cyclicals. So if you're purposely making that type of sector bet, that's fine. But if you think that you're well diversified across all these different sectors, this is a piece of information that would be extremely useful to you. Just like my portfolio is almost 30% invested in healthcare. Again, if you want to be truly diversified, this information is extremely useful to you. Another useful element of my portfolio that you have access to with A+ and Platinum is the portfolio insights. And this is sort of a snapshot of your overall investment portfolio. So you can see at a glance, the number of securities that you hold in whatever portfolio you're looking at. If you have stocks in an individual portfolio, you can see if any of the stocks pass any of our 60+ stock idea screens. You can see the number of stocks that you hold that have a stock grade of B or better. And you can also see whether or not any of the funds or ETFs you might hold have a particular fund or ETF insight. And these insights point to you, for example, that 2 of the 3 ETFs that I have are more volatile than their category. So again, this is useful information to know, especially if you are trying to invest and you might have a lower risk tolerance. This would be very useful information to know that 2 of the 3 ETFs in this portfolio have volatility that's above average for its category. You can also get an idea of the expense makeup of the funds or ETFs that you own. So for my portfolio that I'm looking at, 2 of the 3 of my ETFs have a lower expense ratio. And you have the same information for mutual funds as well. So again, this is just a very quick snapshot of how you can use my portfolio really to make smarter portfolio decisions. You get a very good idea of your overall diversification, as well as alert you to potentially some trouble spots in your portfolio, whether that's the stock grades or volatility or expense ratios of individual funds that you might own. Now, some of the other aspects of A+ that I would like to touch on briefly is the A+ stock grades screener. Now, I touched on the stock grades a little bit earlier, where these are 5 different factor grades that allow you to evaluate stocks based on their valuation, growth makeup, momentum profile, estimate revisions and surprises, as well as quality. So you can look at an individual stock and see what the grades are for an individual stock, but you can also, using the A+ stock grade screener, identify stocks that have certain characteristics that matter most to you. Now, for example, I'm a true blue value investor. So if I were running this screen, for example, I would be looking for stocks that are the deepest value. So I'd want value grades of A, and you can adjust these using these sliders, moving them from the right or the left for a given factor. I'm also very interested in high quality companies. And actually, when we built the quality grade, we actually did back testing on this and found that at each lower quality grade, the performance of the stocks that have those lower grades actually drops. So I am going to look for stocks that also have a quality grade of A or better, of A. So I've gone from a universe of roughly 1,600 stocks to down to 338 with those that have value and quality grades of A. Now, I also am a fan of momentum. Even though I'm a fundamental investor, many studies have shown that combining high momentum with value stocks is actually a really good way to avoid, sort of the value traps, stocks that have very low valuations, but will always have very low valuations. So I like to find deep value stocks that are showing some level of price momentum that might indicate that the market is starting to realize that the real value of these stocks is higher than what their current valuations are reflecting. So I'm going to look for stocks that have a momentum grade of A or better, and just minimum levels, average or above average levels of revisions and growth. And so I've gone from 1,600 companies down to 24 companies, and I have my passing companies list here, and I can sort this list by any of our grades. So let's see. So for example, out of the 24 stocks, Danios Corporation has the highest momentum score. So this is a way that you can use our factor grades to identify potential investment opportunities and really narrow down the universe of several thousand stocks down to a much more manageable level number of stocks that you can do additional analysis on. Another element of stock screening that we have, and something that we actually just recently launched, is an online custom stock screener. And so I mentioned earlier that AAII has the Stock Investor Pro, which is a fundamental stock screening program, but we've also started building an online custom stock screener as well, that allows you to choose the individual fundamental elements that interest you and run the screen to identify these stocks. So I think there's roughly 70 or so different stock screening parameters that you can choose. You can then modify the values either on an absolute or percentile rank basis and run these screens. You can then save these screens for future use as well. So this is another, we've just recently launched it. We're in the process of adding some new functionality to it. For example, hopefully in the next few weeks, you'll be able to run custom filters against any portfolios that you might have created using the My Portfolio tool and things of that nature. And ultimately, the goal is over the next, hopefully no more than the next couple of years, is that this tool will grow and ultimately replace and become an online version of Stock Investor Pro. Now, I've been talking a lot about stocks. I know not everyone here invests in individual stocks, but we also have screening functionality for ETF and mutual fund investors as well. We have an ETF Plus and a Fund Plus screener. And with this, you can search by ETF or mutual fund type. So whether it's an allocation fund, an equity fund, fixed income, and then at a more granular level, for example, if you choose equities, then you can choose U.S. equities, international equities, sector equities, etc. And then at the category level, whether it's a large, mid cap, or small blend, growth or value, you can sort on returns, cost and fee structure, purchase elements, especially for mutual funds, whether or not it's open to new investors, as well as risk and volatility measures. And you have this again for both ETFs and mutual funds. So those are kind of the top level elements of A+ Investor. Again, there are so many additional tools. We have fund and ETF evaluators, stock evaluators. So these are sort of snapshots of individual securities to give you a better idea of whether or not of stocks you may own, or stocks or mutual funds or ETFs that you run across when you're running your different screens. So allow it to take you a deeper dive and evaluate the overall attractiveness of these different securities. But this is, again, very high level discussion, but this has been a high level overview of A+. Again, it's a sort of an all-encompassing one-stop shop for investment discovery, analysis, as well as tracking. So now I would like to pivot now and start talking about our AAII model portfolios. And so I touched on earlier, when it was founded, AAII was very much, and still is to this day, very much about education. And when we started back, it was like the early 90s, actually, there was some pretty important academic research that came out that showed that if you look for stocks that have very, very low price to book values and are at the very bottom of the overall market capitalization spectrum, if you look at the intersection between very low price to book and very low market cap, you generated significantly above market returns. And that research led our founder, Jim Clunan, to create the AAII Model Shadow Stock Portfolio. And I've been at AAII for almost 25 years now. I've been involved with almost every single product development product that we've developed and still market today. But I think if you were to ask me of the one thing that sort of encapsulates AAII's mission, it's the shadow stock portfolio. And what this does is it took sound, reasoned academic research and distilled it down into an actionable, straightforward, easy to follow investment strategy. And this is what the model shadow stock portfolio is. It's a portfolio of 29 microcap deep value stocks that only requires quarterly monitoring. And over its inception, it has significantly outperformed the overall market. Since inception, it's averaged an annual return of 15% versus the S&P 500, which is 10.3. Value did hit a bit of a long stretch of underperformance, but you can see over the last year, value has come roaring back. The shadow stock portfolio is up almost 89% over the last year versus just under 30% for the S&P 500. And this is accessible to all AAII members, but I did want to just, when we started talking about all our different model portfolios, but it's a 29 stock portfolio. At our website, we offer a listing of the current portfolio. We also offer ideas. So these are stocks that currently meet all of the criteria that a stock must fulfill in order to be considered to be a model shadow stock. Now, just because it's on this ideas list doesn't necessarily mean that it will actually end up in the real money portfolio. But if the 29 stocks that we currently own, if those aren't of interest to you, you have an additional group of stocks that you can choose from as well. Then we also offer updates. So on a monthly basis, we provide information on the overall market, as well as relevant news information for all of the stocks in the portfolio. And then on a quarterly basis, because I said we only perform portfolio reviews for the model shadow stock portfolio on a quarterly basis because it's driven, the sell discipline is driven heavily on trailing 12-month earnings. And so that's only being updated once a quarter. So this isn't a portfolio that you have to be monitoring on a daily, weekly, or even monthly basis. But we offer this information. It's available on our website. You can also sign up for the monthly shadow stock portfolio updates. But again, this is a portfolio, deep value, very small market cap. And when you look at all of our AAI portfolios, this is really where obviously you're not going to invest, well, not obviously, but most people aren't going to invest all their money in a microcap value portfolio. But when you start looking at all of the different portfolios that AAI offers, whether it's our model shadow stock portfolio, our dividend investing portfolio, our SSR portfolio, or our VAQ stocks, they identify stocks that basically run the full gambit as far as market capitalization, style, so deep value, value on the move, high growth, high price momentum, factors, so value, momentum, and quality. It runs the full gambit. So as a Platinum member, you have access to, basically 4 model portfolios that have a variety of different styles of stocks. So you don't have to be hunting, if you are more of a growth-oriented investor, we have, VMQ, I'm sorry, the, Stock Superstars report has a couple of portfolios that purposely look for high growth stocks. You can use, even if you aren't looking at our model portfolios, you can use the stock grade screener to identify high growth stocks. So it doesn't really, any type of investor is going to find something of use with Platinum, whether it's the data or the different types of stocks that are in the different model portfolios. But now I want to move on to our premium portfolios, and that starts with dividend investing. Now, dividend investing is a managed portfolio of stocks with above average dividend yields with a history of dividend increases. A couple things to remember about the dividend investing portfolio is this tends to be a lower volatility portfolio. Dividend paying stocks, generally speaking, tend to be of lower volatility. But this is for those people that are looking for consistent dividend income. So because of that, you're not going to find this portfolio slaying the overall market. Slow and steady wins the race, and this is this particular portfolio. But with the dividend investing portfolio, you have a portfolio of 24 dividend paying stocks from companies that have a history of increasing their dividends. So you have this actual curated real money portfolio. We have dividend ideas. So again, if the 24 stocks that are in the actual DI portfolio aren't enough for you, we then on a daily basis have this idea screen. And these are all of the companies that meet all of the criteria that we use when choosing dividend investing stocks. They might not be held. You can see here 3 of our current ideas are actually held in the real money DI portfolio, but not all of them will always end up in here. But a couple of things beyond even the portfolio, which, again, if you're looking for dividend paying stocks, this is a portfolio that we've done the research on the buy side, as well as have, concrete rules-based sell rules as well. But even if you're just looking to evaluate dividend paying stocks, we have a dividend grader with dividend investing. So let's see here. Let's look at dividend paying stock. So with the dividend grader, you can put in a ticker of a dividend paying stock, and that's the key. It's this grader is only will only work with dividend paying stocks. But dividend investing is built on the premise of dividend pillars, and that's dividend valuation, dividend growth, and dividend strength. And when you type in an individual ticker, you can see how a individual stock, dividend paying stock, rates on the three pillars of dividend investing. So looking at Microsoft, we can see that on a dividend valuation side, it has a grade of D, but for dividend growth and dividend strength, it's A. So, this is actually useful because a lot of people might only be interested in very deep value or therefore high yield dividend paying stocks. But there are people out there that will forego a high yield and look for companies that have a consistent record of high dividend growth. So you can evaluate stocks based on dividend growth and valuation. And then with the DI scorecard, you can take a deeper dive into the individual elements that make up these three dividend grades. So for example, dividend valuation, we look at shareholder yield, and relative dividend yield. And you can see how a given stock rates on the individual elements that make up these grades as well. So again, this is an advantage of DI. If you're not necessarily interested in the portfolio of stocks per se, you also have additional tools to evaluate dividend paying stocks, which I think really sets this service apart from a lot of other services that are just a pure income oriented portfolio, are the additional tools that are offered with dividend investing. And then another tool that we just recently launched is our dividend screener. So going back to the example I touched on earlier, I am a deep value investor. So let's say I'm only interested in stocks that have, the absolute highest dividend yield, but I'm also looking for stocks that have a very strong dividend. So this is, stocks that have a higher dividend strength grade are less apt to be cutting their dividend and probably are better positioned to increase their dividend over time. So I'm also going to look for stocks that have a dividend strength of A, and I don't care about dividend growth. So out of the universe of roughly 2,000 dividend paying stocks, there are 33 dividend paying companies that meet the criteria of an A dividend valuation and an A dividend strength. Now let's say if you're the opposite extreme where I don't care about dividend valuation, I'm just going to drop that down to an F, but I'm really interested in looking for companies that have very high dividend growth. So I'm going to move the dividend growth up to A, keep my dividend strength at A. And so we have 98 companies here that have, again, don't care about what the yield is, but high dividend growth, very solid dividend strength. Or, you could look for the intersection of the two and have, attractively valued dividend valuation, very high dividend growth, and you can identify those stocks as well. So well beyond the curated, monitored dividend investing portfolio, you also have a number of tools at your disposal with dividend investing and Platinum that allow you to evaluate dividend paying stocks. So again, I think this is really one element in which dividend investing sort of differentiates itself for more of just the pure dividend income oriented portfolios that are out there. So now I'm going to skip ahead to our next portfolio. And this one is near and dear to my heart. This is the Stock Superstars report. I was involved actually early in my career. I was involved when we developed SSR in 2001, when we launched it in 2002. And I went from being one of the people that helped create it to actually managing it and being the lead editor on it today. So sort of this is kind of my baby. Now with the Stock Superstars report, what we did with the Stock Superstars report is, history shows there are many, many investors, professional investors out there that have been able to generate market-beating performance over the long haul. And we track many of these either more factor-based or guru-based screens with our stock idea screens. And as we were back testing these and as we started to build a history of these different stock screens, it jumped out to us that there are certain guru screens out there that have very high long-term performance. And this is what the stock superstars grew out of. We have chosen 4 gurus: William O'Neill, probably well-known IBD, CanSlim; David Dremin, a well-known behavioral financier; Jim O'Shaughnessy, you probably read a lot of his articles in the journal. He has also written several very well-known, very well-received books, What Works on Wall Street, as well as John Neff, who is a long-time mutual fund manager. And so we've combined these 4 individual strategies into one 40-stock portfolio, 10 stocks in each of the 4 different groups. And so it was like, what better strategies to follow than those of some of Wall Street's most successful investors. So we have 4 individual portfolios, if you will, that make up the Stock Superstars report. And just like DI, just like VMQ, these are very heavily steeped in quant. So we have rules on the buy side, rules on the sell side. And with that, then you're able to diversify with SSR, not only across sectors and industries, but you can also diversify across investment style. The Group 1 O'Neill portfolio looks for high growth, high price momentum stocks. The Dremin portfolio looks for deep value, dividend paying stocks, large cap stocks. The O'Shaughnessy approach is factor based. It looks at factors based on valuation, earnings, quality, and financial strength. And then we have the John Neff screen, which is a deep value, high fundamental, strong, sustainable fundamental growth portfolio. And so we have 10 stocks in each of these 4 groups. We also have, I call them watch lists because these are more curated than the ideas lists that we offer for VMQ and DI. I actually do a little bit of additional analysis looking at stocks that pass these different screens over time. These actually serve as sort of a feeder for the real money portfolio. So when I perform my monthly reviews and we might be removing a stock from a given portfolio, I can go to our watch list and know that these are stocks that I've already done some level of analysis on and have placed here. But then there are also additional ideas for subscribers as well. So it serves a dual purpose. And and one thing I want to touch on that I haven't is for VMQ, DI, and SSR. Beyond just giving you the portfolio, we're there with you every step of the way. Myself, as the lead analyst and editor of SSR, Derek Hegeman, who is the lead analyst and editor for Dividend Investing, and Charles Rotblatt, who is the lead analyst and editor of VMQ, we're writing weekly commentary as well that talks about the portfolios themselves, as well as talking about whether it's an element of investor education, something, how you can evaluate the economy or the market or things like that. So, we don't just give you the portfolio. We're there with you. We're talking about the portfolio. We're listening to your questions as well. That's one of the things I do as being the analyst and the editor is, I'm here. I'm actually, reading the emails that I get from people, responding to them. But then also that feedback is very useful looking to improve these different products as well. And I didn't talk about it earlier, but again, sort of portfolio that I spend a lot of time with is that for all of even the shadow stock, SSR, DI, and VMQ, we offer an extensive collection of getting started materials, whether it's written users guides, onboarding emails, videos, both recorded as well as periodic live webinars as well. So we're here again every step of the way to help you get acclimated with these different services and products, and really try to help you solve those problems and help you achieve your financial goals. But lastly, then, I want to touch on the final element of, there we go, the final element of Platinum, and this is our VMQ stocks. So we have dividend investing, which is income-oriented, dividend-paying stocks with a history of dividend increases. The SSR, which is more of a guru-oriented, picking the best of the best to create a portfolio that's designed to beat the overall market over the long term. And then we have VMQ stocks. And VMQ stocks is based, again, on factor analysis. VMQ stands for value, momentum, and quality. And these are arguably three of the most popular investment factors that are out there. And when Charles Rotblatt and the rest of us were creating the VMQ stocks portfolio, again, we wanted to use recognized, easy to understand academic research to build a portfolio that's very easy to manage and understand for an individual investor. And with a VMQ stocks portfolio, we look for those stocks with the intersection of attractive value, strong price momentum, and high quality. And we then have a 20 stock portfolio that Charles oversees. And you can see here then, here's the current portfolio. You get the value, momentum, and quality grades of the overall portfolio. We have ideas, just like as we do for SSR, Shadow Stock, and DI. But then like all of the other portfolios, we've broken these portfolio down into additional. So if you're interested really in valuation analysis, you can take a deep dive into the different elements that make up the valuation score. The same goes for momentum analysis and quality analysis. So we have our VMQ ideas as well. And then very similar to dividend investing, beyond just giving you a portfolio, again, that's very rules-based on both the buy side and the sell side, we also have the VMQ analyzer. And so what this allows you to do is, out of the 6,900 or so companies that are in the A+ investor universe, you can get an idea of how an individual stock that might not even be held in the VMQ stock portfolio, how it stacks up or how it rates based on the elements of value, momentum, and quality. So let's take, for example, a stock. Some of you might have heard of this one. Another $1 trillion company, if I read correctly the headlines today. Tesla. So with the VMQ score, then you put in an individual ticker and you can see how it rates based on the elements of value, momentum, and quality. Probably no surprise here. Tesla ranks as an F as far as valuation goes, ranks in the 97th percentile based on valuation. Probably not surprising as well that its momentum score rates very highly. It has an A momentum score, and it actually has a reasonably high quality grade. Ranks a B grade, ranks in the 63rd percentile, with the higher being better. So with this now, not only do you get the portfolio with VMQ, you actually then have this VMQ analyzer where you can evaluate stocks based on the concept of value, momentum, and quality. And actually, Pete and I were talking a little bit earlier today. One of the hats that I wear is the overall head of research and analysis products at AAII. So I'm constantly thinking about, how can we be improving these services, creating the next, great service to help individual investors meet their financial goals. But an element here that probably makes sense is to actually at some point offer a VMQ screener where you can, similar to the stock grade screener, but focusing on those elements of value, momentum, and quality. But at this point, you can at least evaluate individual stocks. So again, giving you a very high level, sort of 30,000-foot view of Platinum. But at the end of the day, again, it's a complete wealth creation system. Either evaluate stocks, mutual funds, or ETFs that you already own and track them, or by looking at portfolios that are offered up or using any of the tools, the screening tools for stocks, mutual funds, or ETFs, and be able to track individual tickers that might show up and put them more on a watch list and be able to track them over time. You have an all-in-one sort of one-stop shop analysis platform with A+, as well as a variety of investment portfolios to invest in as well. So, that again, my high-level review of AAII Platinum service, and wanted to give about 15 or 20 minutes. Obviously, I can stay much longer, but I definitely, within the allotted slot, wanted opening things up to questions. So, Pete, let's start taking some questions.
And yeah, Wayne, we have a lot of questions. I actually want to start with my question first. It's clear that the powerful research capabilities of A+ Investor, along with the curation of all of the premium newsletter services, that this is really the ultimate idea generator. And I wanted to make sure that everyone out there was aware that we had sent our members a survey a few days ago, asking, what your biggest concerns are, what can AAII do to better help you. We want to help understand you better so that we can create a product that aligns with your needs. So Wayne, I wanted to read a few kind of points that I read there and just get your reaction out of it. So a lot of the themes that kind of emerged from the biggest investment concerns were inflation's effect on the portfolio, uncertainty, market volatility, concerns about a large correction, diversification versus concentration, deciding when to sell, and finding the time to work on the portfolio. And with all these things going on, I guess the big time saver here is the dashboard, the Platinum dashboard. So I just wanted to get your thoughts on how our members can resolve all these concerns through using the Platinum dashboard.
Well, we'll sort of, and you probably have to remind me of some of them, but first off, talking about the aspect of a correction. I use technical analysis. I probably use technical analysis the most of anyone at AAII, but I am not a market timer. And so, when it comes to a market correction, there are people out there that claims that I've called the last, 2 or 3 market bottoms. Very rarely or at all is anyone able to consistently hit market tops and bottoms. So first and foremost, if you have money that you're going to need in the next 3 to 5 years, whether that's you're looking to retire, so you're going to need money to get you through those first few years of retirement. You're planning to send the kids off to college, so you're going to need, start writing those, I don't even know what colleges these days are, probably 20, 30, $40,000 checks every year. No matter what you're looking at, even buying a house, just want to take a big vacation. If you're going to need money within the next 3 to 5 years, it shouldn't be in the market. That's the easiest way to avoid any heartbreak from a market correction. One of the saddest things I can remember as being an AI, working in AI, was we had a investor conference in Vegas shortly after the Great Recession. And I met so many people that said I have to postpone retirement pretty much indefinitely because of the haircut that I took when the market made such a big correction. And, talking to them, they hadn't started positioning or moving some of that money out of the market. And so, I'm not trying to time the market, but the easiest way to save yourself that heartache is to make sure that you've protected the money that you're going to need over the next 3 to 5 years. So, you can still stay invested in the market, but that you've got the money set aside, that you're not going to have to be selling when the market's going down, which is the absolute worst time to be selling. So that's really the best way to avoid a market, or to survive a market correction. But obviously diversification is going to play a big role in that as well. But you have a black swan event such as the Great Recession, the pandemic collapse of early last year. Basically everything is going down at that point in time. But it's being invested, having some of your money invested, it's asset allocation. So, depending on your risk tolerances, you inevitably having parts of your portfolio invested in bonds, but it's also the type of stocks you're invested in. So, dividend stocks tend to be, again, less volatile. than other stocks, especially in a market downturn. They're not going to be fully insulated, but they're going to fall less. So, it's, again, I strongly believe in diversification as a way to minimize the volatility. So let's see what else. When to sell? Yes, there's countless information out there on what to buy. There's very little, relatively speaking, information out there on when to sell. And that is one of the tools that we're trying to identify and provide with A+ Investor, is giving you those analysis tools to decide whether or not it's time to sell. We have our stock screens. We have a tremendous amount of data. We have our stock grades. As someone who has been involved with stock screening for nearly 25 years, literally from day one of the association, I've been using stock screening software or tools. If you have a quantitative screen that you're following to identify buy candidates, it's very easy to flip that screen around and turn it into a sell screen. So if you're investing in deep value stocks, then the easiest thing to do is you obviously want to give them some runway to run, so that valuation will start moving up. But if you look to buy stocks that are like in the bottom 10 or 20% of the stock universe based on valuation, you might want to think about selling when it starts reaching the 60 or 70th percentile. The same thing when you're looking at our stock grades. You buy a stock because it has a valuation grade of A, but all of a sudden you see that valuation grade has now slipped down to a D or even an F. Why did you buy it? That ultimately should be your driver of why you would turn around and sell it. So you have a number of tools and resources at your disposal with A+ Investor to help you guide you on those sometimes very difficult sell decisions. So those are the two. I probably missed some of those other, Pete.
No, that's a great answer. And I can tell by the list of questions here that your presentation really resonated. So we're going to go through them. And Wayne, up on the screen, you've got a special offer for our attendees. You want to just talk about that really quick?
Oh, yes. So for attendees, if you go to www.aai.com/store/platinum offer, we are offering a special pricing for AAII Platinum, 1 year at $499, 2 years at $899, and 3 years at $999. And as you can see, then the more years you commit to us, the greater your savings. But even at the 1 year level, you're saving $300 if you versus buying all of these packages individually. So again, ai.com/store/platinum offer. We're going to be keeping this up for probably the next week or so, Pete.
Yep, that's right.
So yes, but our thank you for taking the time to sit with me today and to provide these very useful tools at a discount.
Okay, so let's go through the questions. First one, let's do two birds, one stone here. Rob asks, how do you define quality? And then another member, just had a comment or a question. They're asking if the letter grades are a black box process, or can a subscriber learn all the criteria used for each letter grade?
AAII does not believe in black box systems, so that is question number one. For all of our different stock screens, all of our different tools, we try to be as transparent as possible. Even on the sell rules for our given portfolios. So let's see here. Let's pull up. So when you put in an individual ticker at AI.com, if you're an A+ or a Platinum subscriber, if you put in the stock ticker, you get the stock evaluator, and you can see right off the bat, you have the A+ stock grade summary. If you click then to access these, you can see, for example, that the value grade consists of the price of sales, price to earnings, enterprise value to EBITDA, shareholder yield, price to book, and price to free cash flow. So this is a composite of different valuation grades. So you can see, it shows you the underlying elements that make up a particular grade, talks about how it goes about calculating it, gives you that when a gentleman, the question was, how do we find quality? The elements that we use when we're evaluating a company's quality is return on assets, return on invested capital, gross income to assets, buyback yield, change in total liabilities to assets, accruals to assets, the Z double prime bankruptcy risk score, as well as Piotrowski's F score. And it goes through and it discusses these. So yes, we're very transparent. We show you exactly the elements that make up these individual grades, gives you the score, the individual reading for the company, as well as how it stacks up against its sector peers.
Thanks, Wayne. Next question. There were a few questions related to the stock screener and understanding whether it's a benefit of being a platinum subscriber or is it open to all AAI members. And maybe you can just kind of describe, and we'll make this more clear on our website in the near future. But just if you could describe what basic members get in terms of screens versus A+ investors versus
Certainly.
platinum subscribers.
So as an AAI member, you have access to our factor and guru screens. So these are the 60 or so stock idea screens that I was talking about. And you have access to passing companies lists that are updated on a monthly basis. So this is what you get with base AAI membership. With A+ and Platinum, you then get our custom stock screener, as well as the stock grade screener, as well as the ETF and mutual fund screeners. So you have access to our idea screens as members, and then when you're looking for custom screening, that's when it rises to the A+ and Platinum level.
Thank you. Let's see here. There was a question about a screening model for fixed income investments.
We do not have access to a bond database. The biggest problem there is the bond pricing and just bond databases in general are so fragmented and, to be brutally honest, extremely expensive. So we do not offer screening for fixed income.
Let's see here. Richard is wondering if there are any, I'm probably putting you on a spot here, Wayne, any coming attractions or services on the drawing board for AAII Platinum?
Well, we are looking, well, the big thing is we're actually in the process of securing more granular fund and ETF data that will allow us to do a greater level of diversification analysis for the My Portfolio diversification analyzer. We're actually in the middle of testing the ability to run screens against saved portfolios in the custom stock screener. Pete mentioned that Pete and I were talking about maybe introducing a VMQ screener. So those are some of the things in the near future. But yeah, there are, this isn't part of, well, continuing to build out the custom stock screener. But then also we have a few ideas rattling around as far as what maybe a next offering would be, whether that is a new tool or a new newsletter that would then be included in Platinum. Because one thing that I didn't mention was the fact that not only is Platinum A+ plus all of our premium portfolios, but Platinum then it would include any additional newsletters that we launch in the future as well.
There was a question here about the kinds of commentary that is provided in the premium newsletters. Do they discuss black swan events? You mentioned that earlier. The impact of COVID or the next big event. What kind of things do you talk about in your commentaries?
I mean, speaking to the things that I'm looking at, I try to stay away in some aspects to sort of macro type things. Those. Being fully invested in the market all the time, you can make maybe some strategic moves. But I mean, basically anything is fair game. It's again, this is speaking from me, Pete, can you see my web browser?
Yes.
Okay. So, just looking, I can show you a rundown of, some of the topics that I've touched on in my weekly SSR. Uh, so, this past week, talking about October 19th, the only day in U.S. stock market history where we had a bear event in a given day that the market fell more than 20%. But I do a lot of reading. So back on August 20th, I read an article on Nobel laureates and the elements that can trip Daniel Kahneman, the things that can trip us up when we're trying to make investment decision. Well, just decisions in general, but you can also then translate this to investing as well. So really we cover everything. Again, I have numerous websites that I look at, but knowing Derek and Charles are an equally voracious reader and seeker of information. So you're going to get a pretty diverse collection of commentary from Charles, Derek, and myself through these three different portfolios.
Wayne, someone here is asking, if someone wants to follow one of the model portfolios and wants to imitate it, they're asking if there is an alert issued whenever there's a change made, an addition or a deletion.
So not well. There are alerts on the model shadow stock portfolio when we make a buy and or sell decision. For DI and SSR, the vast majority of times, those decisions are always made. Well, for DI and SSR, those decisions are always made at the end of the week. DI, we only sell on a monthly basis, so those would correspond then with our monthly newsletter that comes out. Group one of the SSR portfolio, which is the CAN-SLIM oriented approach, which does look at price momentum. Every once in a while, a stock might have a significant breakdown with price and momentum, so it might warrant a deletion intra-month. But even at that point, those would be in the weekly commentary as well. So all of that information is always captured and disseminated at the same time through either our weekly or monthly alerts. But for the others, we don't have like specific deletion alerts. I take that back. VMQ does. But those are always, the others are in the weekly commentaries.
And Wayne, we're a few minutes past our time. I do want to get a few more questions in, and then we'll
Absolutely.
wrap up here. Someone's asking, do you have the ability to download from brokerage portfolios?
We do not. That is, me personally is something that I'm really hoping to capture. This is something that if we're going to offer that level of functionality, it's something that we want to make sure we do correctly. So that's going to require inevitably some reworking of the My Portfolio tool in general in order to offer that level of functionality. So it's on my to-do list. It is, it's one of those things we have to make the decision. We have a small but dedicated group of programmers, but they need to sleep from time to time as well. And I'm sure they cringe whenever they see a Teams message or an email from me, probably with another request. But that is on my wish list. But it's going to involve, to make sure that we roll this out correctly, it's going to involve research on our end and potentially some internal reworking of the My Portfolio tool. So currently we don't, but it is something that we are aware there's a keen interest. And again, me personally as the product manager for A+, something that I would love to be able to deploy if we can do properly.
And we'll make this the last question. Now, the concern might be that there are so many strategies, so many screens, model portfolios. It might be like drinking from a fire hose. How do you decide what's right for you, and how do you manage that so that you're only focused and receiving information on the strategies that you're interested in?
It's a great question, and one that we get a lot. First and foremost, it's know thyself. There is so much information out there And just because a given model portfolio owns a given stock doesn't mean that it's a stock that you should necessarily own. So the first thing you really need to do is fully understand, do that real, hard, deep analysis of yourself and identify, you know, what's my time frame, what's my risk tolerance, are there any, am I more of an ESG type investor, really get an idea of what you want to do as an investor and what you're willing to accept with risk and everything like that. By having, a really good idea of the type of investor that you are, very easily will you be able to start removing wide swaths of either our stock idea screens, even the model portfolios themselves. If you're very much a growth investor, chances are you're probably going to bypass DI. If you're a deep value investor, then DI might be of use to you. The model shadow stock portfolio might be of interest to you. There might be a couple of the portfolios in SSR that might be of interest to you. So it's really knowing the type of investor that you are, your risk tolerances, your time horizon. Once you know that, you know, sort of the extraneous things will very quickly fall away, and you won't be drinking from that fire hose again.
Well, thanks, Wayne. There were a few questions about the price. So again, the price of AAII Platinum starts at $4.99 for basic members. For life members, it's $3.99. However, if you've purchased or if you currently have access to multiple subscriptions, the price adjusts based on that. So you'll pay a lower price depending on how many subscriptions you currently own. If you were to order that straight off of the website, the website is smart enough to adjust and apply those correct numbers. You will be receiving emails that will give you more information on this product itself. And it's a 90-day money back guarantee. You are in full control over this product because you have the dashboard that gives you access to all of the model portfolios and A+ investor tools. However, and as well as you have full control over your subscription. So at any time during the first 90 days, if you're not satisfied with it, then you can call in and get your money back. Wayne, any last final words?
No, I just want to say, hey, Pete, thank you for sitting in and moderating today. I very much appreciate it. But sort of along the lines of drinking from the fire hose is, you have 3 highly dedicated analysts overseeing these products, as well as myself, who oversees A+ Investor, and we are resources as well. And that is, we're not sitting up on a marble pedestal or something like that. If you have questions about this, reach out to us. That's what we're here for, is to answer these questions and to help you get involved in these products, and again, to help you achieve your financial goals.
Well, thank you, everyone, and have a good afternoon and good evening. Take care.
Take care, everybody.